In this video, I'm going to tell you the UK stocks that will benefit from the rollout and subsequently dominance of 5G technology. Disclaimer, I'm not a financial advisor, and if you seek financial advice, please see a licensed professional. Before getting onto my stock picks, I'm going to explain what 5G is and explain what you need to know about it. This video has taken a long time to make. This is also my second time recording it due to further microphone problems. So please drop me one of these for the YouTube algorithm and please consider subscribing. Firstly, 5G is the next big step in wireless technology. It's considered to be a massive upgrade from 2G, 3G and the commonplace use of 4G. They've suggested that 5G could be 100 times faster, meaning that we wouldn't even compare speeds in megabits per second, but rather in gigabits per second, which is a massive upgrade, meaning you'll be able to download all the NSFW stuff to your heart's desire in a few minutes instead of a few hours. This means that many businesses can benefit from the rollout of 5G. An example being companies using automated manufacturing, in which the speeds at which they're able to manufacture these products could increase, but also the automotive industry, such as those as the semi-autonomous cars like the ones that Tesla provide, could have faster connectivity and therefore have a much lower response rate to certain risks, and therefore the car could save a lot more lives. It's quite exciting to think about what the future may bring with 5G technology, and the UK government has suggested that they would like a majority of the population using 5G technology by 2027. Firstly, I'm going to start with an AIM listed stock, which means there's high volatility, low liquidity and a lot more risk as there is less regulations in the market. However, this is also the highest market cap company on the list, so take that as you will, as it is listed in the AIM 100 and would be a lot safer than the riskier speculative stocks. This company provides communications and software services in the United Kingdom and internationally, with strategy services such as inbound call communications and collaboration, and network services such as Ethernet, broadband, mobile, and much, much more. Therefore, I believe Gamma Communications will benefit a lot from the rollout of 5G. However, currently they are priced at a high price earnings ratio of 40.5 times, and subsequently a price to earnings growth rate or PEG ratio of 5.7 times, suggesting that this could be overvalued to investors. However, these investors also have higher sentiment as they're more willing to pay for less earnings of the company and believe in the future that this company has a lot more growth potential. So since they aren't a value stock, I'm very much interested in their growth potential. In the last 5 years, they've managed to grow their earnings by an annual compound growth rate of 19.7% and also increase their profit margins from 5.4% to 10.7%, which means as the business and their earnings grow, so does their profitability, and this could be a great insight for long-term growth potential. However, are they good at generating returns on shareholder equity? Gamma Communications are able to generate an impressive return on shareholder equity of 20.9%, which completely outperforms the industry of 7.4%, and which I believe a statistic of above 20% is excellent for shareholders looking to invest in a company, as it means the management are very much skilled and the business is in a well-placed position. When looking at return on capital employed, this more or less reinforces the point, as they were able to generate a return of 25.6%, suggesting to me that they are an excellent growth potential stock. However, some of these metrics can be skewed by our high debt loads. So what is the quality of their balance sheet? In fact, Gamma Communications have an excellent balance sheet in which their short-term assets outweigh their short-term liabilities and long-term liabilities combined. However, they do have a very low debt load of 2.2% debt to equity ratio. Although it was debt-free in the past, so there is a negligible amount increase, but that could be subsequently priced in ever so slightly into the stock. Although with many companies suspending their dividend during the pandemic earlier this year, was Gamma Communications one of them. Actually, this is one of the safest dividends I've seen. Although it is only currently yielding 0.66%, they currently pay biannually in June and October each year. They've grown their dividend this year by 12.9%, and it is likely a trend that will continue to happen. And this dividend is well covered by a payout ratio of 28%, meaning they've got a lot of potential to grow this in the future. If you'd have owned this stock in the last 5 years, you would have gotten returns of 416.2%, completely outperforming the market of 22.5% with dividends reinvested. I potentially would buy this stock for its long-term growth potential, its increasing profit margins, and the relevance in the 5G sector. However, this stock is only on my watch list for the time being, but I could end up buying this in the future. The next stock on the list I would consider to be more of a hidden gem despite it being priced at a higher price earnings ratio. This is because it requires more of an out-of-the-box mentality to think of this stock, and therefore realize its potential to be gained from 5G. But this could also mean that it doesn't benefit as much materially in the share price from an increase in 5G users. Regardless, this company designs and manufactures power supply systems in Europe, North America, and also Asia. They offer engineering services for healthcare, industrial electronics, semiconductor equipment manufacturing, and technology industries. This company is called XP Power, and I suspect they will benefit greatly from the rollout of 5G, as a lot of their technology, such as semiconductors, will likely be used in these new 5G devices, and these 5G devices are going to require power supplies. XPP has a price to earnings ratio of 46.8 times and subsequently a price earnings growth ratio of 1.9 times. This suggests to me that currently they have had slower earnings growth, but investors are more likely to pay more for it, more of a premium, as they believe in future this will change. This is supported by the price earnings growth rate, in which analysts have forecasted that their earnings growth will accelerate. However, once more, it seems like a trend with these 5G stocks that many of them are overvalued stocks trading at a premium. However, these are the stocks that I typically look for and believe that momentum is an excellent stock to buy into, as it's very easy for them to trade at higher price to earnings multiples. Well, is XPP an excellent growth stock if it is not a value stock? Well, it's quite complicated, as XPP have had weak earnings growth in the past, and in fact in the last 5 years they've only managed earnings growth on average of 3.9%. This is despite their revenue climbing. Their earnings growth has actually been declining, which isn't a great prospect, especially when looking at the future outlooks of the company, especially when you consider that their profit margins have gone from 19.2% to now 8.9%. This also puts a dividend in a less than secure position and makes it prone to cuts or suspensions in the future. Perhaps they're doing better at generating returns on shareholder equity, which is actually not the case. They've only got returns of equity of 12.3%, which is only slightly better than the industry. This is also backed up by their returns on capital employed, which is 11.1%, and 3 years ago it was 25.6%, suggesting to me that this was an excellent opportunity until recently, which either could have been a change in management or perhaps just struggles around the pandemic. Regardless, this could be an excellent recovery play, but at the moment is struggling. But they could have high debt loads skewing these returns even further. And in fact, this is the case. They do have a higher debt load of 31.5%, which had increased from 5.3% in 2015. But their short-term assets do outweigh their short-term liabilities and long-term liabilities combined, making them have a pretty strong financial position. And the debt is well covered by cash flow, so it is less of a risk to investors. However, the biggest advantage I see to XPP is the fact that they are an excellent dividend player, currently yielding around 1.6%. They are also a quarterly payer in the UK, which is rare. They typically pay in January, April, October, and July. And they have managed to pay a consistent dividend in the last 20 years. Typically, on average, they've managed to grow their dividend each and every year by around 8.10% prior to the cut and suspension, and I believe in future this will be a continuing trend, making it an excellent dividend growth stock for your portfolio as long as they do end up making a recovery play and benefiting a lot from 5G. In the last 5 years, you would have gotten returns of 223.1% with dividends reinvested. My favourite stock in the sector is a company that provides solutions to develop devices and operate network services worldwide through different segments consisting of network and security, lifestyle, service assurance, and connected devices. This stock is called Spirent Communications, and I believe they will benefit from 5G as they test 5G connections and network speeds. I believe these to be the highest value stock on the list with a price earnings ratio of 24.3 times. However, their price earnings growth is considerably higher with 6.7 times, suggesting to me that analysts have forecasted this growth to slow down a lot. However, in the most recent years, they have managed to grow their earnings by a lot, and therefore investors are more willing to pay for a premium for the stock as they believe this trend will continue. In the last 5 years, they have managed to grow their earnings by 50.1% on average, which is impressive returns, but this is also considering that they were unprofitable in 2017 and that they were struggling and on a declining trend prior to 2015. In 2015, they had profit margins of 1.4%, but they now have profit margins of 18%. I feel that the stock is trading at much lower multiples than it potentially could be in the future, and therefore see it as an excellent 5G recovery play with strong growth potential. This is because they've managed to generate an excellent return on equity of 23%, beating the industry of 7.4%, suggesting that their current management now is more skilled than it was prior, or that the business is in a better position. This is also backed up by their impressive return on capital employed of 23.9%, which is much higher than it was 3 years ago. Once more, these metrics can be skewed by debt, so how is the quality of their financial position? In fact, Spirent Communications are probably the best financial position on the entire stock selection list. Their short-term assets outweigh their short-term liabilities, and long-term liabilities combined. They have zero debt and have not had debt in the last 7 years plus, meaning they are very likely to pay a dividend and it not be affected by pandemics or any potential recessions in the future. Currently, SPT has a dividend yield of 1.51% and typically pays in May and September each year. This is combined with a low payout ratio of 36.6%, meaning they have a lot of ample room to grow the dividend but also reinvest profits back into the business and increase their earnings growth. Despite being unprofitable in 2017, they have made the decision to continue paying their dividend, albeit not growing it. This could have been a risky move for investors, although it meant that they at least were drawing in income from the stock, and the company were still able to recover this and subsequently make a much more higher and consistent profit margin. Since then, they have been growing their dividend, although it started off slower. It started off with 5%, then 10%, to growing their dividend by 20.04% in 2019. This is a trend that I believe will continue to accelerate and find a consistent plateau. If you bought Spirent Communications in the last 5 years, you would have gotten returns of 352.9% with dividends reinvested. And it is an excellent performer that I believe will continue on an upwards trend. This is a stock I'm very much interested in buying, and it is also on my watch list. If you're interested in my stocks to buy and hold for life in the UK, then click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. Have a great day.